From the floor of the CME Group, this is Danny Riley with today's Mr. Top Step update. Today's Friday, January 5th. There's all sorts of big stuff going on here, and you know what? It all spells out liquidation. It all spells out liquidation, and it's not just liquidation, and it's liquidation all over. The crude market just about 10 minutes ago sold off $3 in about 5 minutes. This is all part of something that we've been talking about for the last few days. We heard that there was a commodity fund out of London that was liquidating, that had overexposed itself to commodities on the upside, and with all this liquidation, they're selling out all these positions. But just now in the crude market, we just heard that an energy firm out of California, a natural resources firm out of California, is blowing up, and that could be why the crude oil just dumped so quickly. Over in the 10-year note options, we've got about 70,000 traded. Over in the Eurodollar options, they've got about 300,000 traded. But here, you know what? We're all about the S&P 500 here, and that's what we do for a living, and that's where we're going to emphasize what we're going to be talking about today. Yesterday, we put out something on our Mr. Top Step update that said we had the 1066 level as a key area, and a drop below there could bring us down to the 1050 level. Well, guess what? 1050 half is a low today. Our 51 is a low in the day session, 50 half is a low in the Globex session. You know, what's happening here is all this liquidation that's going out of commodities is actually not really a good thing, because what it's doing is it's scaring people out of positions, and in turn is forcing people out. You know, as the euro currency goes down, the dollar goes up, stocks go down, bonds go up, but this other stuff that's going on the fringe of this, like the crude oil markets and some of this stuff overseas, is not good at all. You know, we've had a very, very good ride in the stock market since March 9th of last year, and actually this desk had something that was sent out the day before the low that the market had gone way too far. Now, I'll admit that we didn't think the market could go up as high as it did, and I don't think that many people did. But you know what? We're back into a sell mode here. We think that the way the markets are set up, any further negative events going forward could just push this thing right back down to the 10 even level, and then down into the 950 levels, which is where we think it's going. You know, the other thing is, we had huge volume today in Globex prior to the open. We had 750,000 minis traded, and even during the credit crisis, I don't remember anything at all like that happening. You know, what that tells us is a lot of people are adjusting throughout the night, and they don't have, either they're trading foreign markets and they need to adjust, and they're going into the mini at night or into the morning to put their positions on. But either way, 750,000 minis is a lot. Right now, we've got about 14,000 big S&Ps traded, and we've got over 2 million minis traded, and it's only 8 minutes after 11 Chicago time. This is big stuff. Throughout the whole floor, the markets have been busy. We continue to think that the markets are on the offer side here going into the close. But we also have a but. Out of the last 19 Mondays, 16 have been up. And the deal is, what a lot of traders think is that, and I'm not quite sure, we're not quite sure about this because of the commodity liquidation that's going on, or this talk about the hedge funds that are blowing out, that you should try this. But a lot of guys come in on the close and buy the S&P and hold it into Monday. That's been the trade. Now, we can't recommend that. We're not recommending anything. We're just putting it out there to let you know that this is a concern on the radar moving into the weekend. That's going to be it for the week. You know, we hope we did a good job for you, and we'll see you next week.